Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily stock market analysis show where we look at what happened in the market during the day and learn something from it and plan for a better trade for the next day. Alright, so what a day. The bears hit hard. It was a big downfall that happened both indices following the Fed hawkish view that came in yesterday night. And what exactly happened? We'll look at the charts and then analyze and study. And this is one last for December 16th, Friday, tomorrow, 2022. Let's get into the charts. Here we have the daily. Just quickly look at the weekly. Let's begin with that. The week is one more day. Look at this. This is exactly what weekly candle is showing. It's a gravestone. Confirmation of that will come tomorrow only. But otherwise, we have broken out from a trend line resistance since multiple weeks, and previous week was a pullback from the Nifty, and this week also seems to be a confirmation of what was shown by the charts in the weekly charts in previous week. And the same gravestone doji indecisive selling pressure is indicative of this candle. The same candle is in the Banknifty also weekly, but week will end only tomorrow after 2 months. So we'll have to see what exactly happened, but most likely even if it moves up, it could end up being a inverted hammer with a longer link size unless big moves come in. Even if it move down, it would be a hammer only, right? Hammer on the top of a price trend is indicative of some reversal. So there is some bearishness that has come. The other day we had been talking about this wedge on the daily charts. That's what is more important to us for a for a trading, single daily analysis. Daily charts is what we look at, right? So we talked about this ascending wedge yesterday, right? Ascending wedge was closing in, and there is every chance that it can break down. So that's exactly what happened today. And Banknifty also the same. It was getting even narrower as it goes up, and also there was a bearish divergence also that is seen on the Nifty, and it has met its target completely. Right? That is exactly what happened. But given that 2 days was an expiry day, I never thought. I was my bearish view. The view was my bearish view. If you look at the charts, actually we had mentioned about this bearish divergence and this ascending wedge. But we never thought it would be this harsh. We thought, I thought the bearishness would be slow, but it was a harsh downfall that we saw. Now let's go to the Bollinger Bands. What does it say? So Bollinger Bands are showing Nifty suddenly you can see a contraction, sideways indication, and a breach of the moving average support, right, which is bearish bias. Breach of the 20 moving average has not happened actually, and that is another wedge, right? So the breach is here, so that has not happened after, but in the Nifty it has happened. It breached the moving average and closed below that, much below that. So it's bearish bias. This is still bullish bias, but Bollinger Bands indicating some sideways consolidation because the bands are now contracted after an expansion on both the indices. That's it. So basically today we lost 245 points on Nifty and 551 points, more than 1% on both indices, right? So that's the kind of down move that happened today. And both candles are wide range bearish, and there is the ascending wedge downfall, and also the seen. And intraday the price action was trending downfall from beginning itself on both indices, right? So 20 DMA support is lost. So overall price action indicating more bearishness to follow is what it's indicative. Now that's what it indicates, right? Support resistance levels, the 18,678 and 18,778 on the upside. Previous swing highs, downside 18,351 and 18,262 and 18,103. That's very crucial. This is very crucial. And that's a swing low, and then if that breaches, the price pattern turn bearish. Banknifty 44,000 and 151 on the upside, all-time high and levels, and rounding number 45,400 Put your resistance after that rounding number. 43,339 support downside, then 42,961 and 42,740 are the previous swing lows on the downside. So we are basically talking about resistances here, here and above, supports here, here and below. Right. So 18,103 would be a breach of this swing low and this swing low, and that is something that we have to be very carefully looking at. Bank Nifty similarly, if there is a breach of this zone of 42,500 broken, then we have again a similar breach that may happen. That's another 1,000 points of plus. So let's hope that much kind of fall may not come in. Hopefully, never know. Yes, that's the support resistance levels. Bollinger Bands were studied. Now the momentum has tipped the sideways back for the Nifty, but Bank Nifty is still having a momentum bullish on the daily charts, and also it is unconfirmed, and it's still maintaining the bullish momentum on the Nifty. Nifty, you have the breach. We had a bearish divergence for the price moving up, and normally is falling down, and now it slipped into the sideways back. Trend also has crossed over in the case of Nifty, and it is rising up. Bearish is rising up. Bank Nifty, the crossover has not happened, but there is a bend that has happened on this trend indicator of the DEC. So that bend shows the end of the trend in the short term. Right. So once the crossover also happens, then we can expect more downfall. So trend and momentum has turned negative. Although the bullish momentum and bullish trend is maintained in the Bank Nifty to some extent, but it is rising up towards the reversal of that momentum and the trend in the Bank Nifty. Also very soon is what it looks like. VIX has spiked up again 6.6% one day, 13.73 from 12.5 something yesterday. Yeah. So big spike that happened. This is what happens. VIX has gone to the lowest levels and the now spikes happened. Yeah. Futures high, short build up and long binding is what I've seen. The futures high, options high may not be very much varied because active trading of the next weekly expiry is happening from tomorrow, December 22. As of now, 18,000 and 18,600 is where the levels are showing. 46,000 and 44,000 points for the next expiry in December 22. PCR has fallen closer to the bearishness, 0.55, and not bullish enough for 0.64 PCR for the next expiry on Bank Nifty. These levels of the options OI will be clear on from tomorrow. So overall, yeah, so bearishness indicative in this week in the operators as well. Sectoral watch, nothing but heavyweights, nothing but all went bearish basically. All the sectors closed at IT, metal, reality, FMCG all fell more than 1%. Auto fell less than 0.5%. Auto, pharma and FMCG, all these fell less than 1%, and greater than 1% is IT, metal, reality, FMCG, right? So big fall happened in those sectors, right? So across sector selling. Metal is only sector that has got some momentum bullishness that is there in the short term. All rest all has fallen in the sideways. Right, stay out of them until it comes back. Heavyweights, all the heavyweights have fallen 1 to 2.5%. That is the range of the fall that has happened. Right, except the Kodak Bank, which followed a little 0.5%. HDFC Bank is only heavyweight that is having bullish momentum. Is all in the sideways, and even Kodak Bank is now in the bearish zones also. So across sector, across heavyweights, selling is what happened today. No doubt about that. So Fyers selling was naturally that 710 crores of selling happened in the cash, and small buying of 260 crores of happened by the DIS as well, right? It's actually 260 crores of buying that happened with the DIS. So crude oil, so that's about it. Institutions are were selling, that's why the market falls. Retail selling also was probably there following the speculation on the hawkish commentary by Fed last night. So across sector falls, all indicators negative. They are selling, if I are selling, not big, but the sell mode. It's all negative. This very short up. Crude is falling, but this it was falling. In fact, it fell 44 on top, 44%, and now it is reached the bottom of the trend line channel, and it's trying to spike back up, and slowly it is touching the 78 nearby levels. It's not that good, but as long as it remains below the 90 level, it should be okay. But since it has reached the bottom, there is good chance that it can spike up in the coming days, short term. Dollar is rising and moving up, although momentum is bearish. It has pulled back substantially. Now it is on low 443. But the thing is, the rupee is still weak. The US dinar is rising up 82.5, which is concern, as we mentioned every day. Gold has fallen after it has tried to climb up from these resistance zone to do the next resistance zone. Didn't happen. It's facing resistance and then falling from the resistance is what sideways movement from the bullish movement. Just turn to that, right? Gold, the hedging instrument, gold. SGX is showing some red and it was also showing some flat falling. As of now, but you'll have to see these indices tomorrow morning as to how it performs during the night. Only then you can take it picture. But overall, this is what the futures Dow Jones is showing. There is a descending wedge and it has hit hard there, fell down, tried to climb up, and then finally ended with a hammer inverter, and this indicated that there is more fall could come in. So this hammer pattern, if the this week is ending with that kind of pattern, then it's indicating that it can fall down to the next support zones, and then whatever resistance conquered may have to be given back. Same is the case with Nasdaq. It is at a descending wedge. Same with S&P 500, the broader index also same. Inverted hammer or doji, a small body candle, gravestone candle, basically not inverted hammer, it's gravestone, which is heavily bearish if it is closing likewise in the next week. So big moves that happen in the US markets, you have to be careful. It may, and our markets will get reactions like it happened today most of the times, right? Although we have been performing in, if you look at a longer term, our markets have been performing compared to all the other markets across the world. We have worries there if the US markets are falling big. We have to keep a close watch. So major events, sometimes US markets continue reaction to the day after the Fed interest rate decision has happened also. So today also it could fall in tomorrow. It may, it may also react. That's the event that is there. Now that event is seen as it now. So two topics: Metropolis, healthcare, Aarti Industries, both are short, and United Spirits is a long. Let's quickly see why it is long for United Spirits. It's a festive season, festive mode, and it's a cup and handle pattern, and it is broken out. So with tight stop loss, you can probably enter if the price moves above the candle high. Metropolis is healthcare is having a descending wedge, and it's likely that it can go down to the support zone of 997, right? Because momentum is falling into the bearish zones. Trend also is in the bearish zones, rising up close over to that. So one short RT, that's another stock which is also having a trend line channel and it's falling down. Momentum is bearish, trend is also bearish in the medium term, so that can be also short. RT Industries, Metropolis Health Care, short swing shorts with tight stops, and the United Spirits long if the price moves above the previous candle's high weekly. Right, so that's the two stock picks for the next day, two shorts and one long. Now that we studied all this, let's summarize the study for the analysis and come to a conclusion of a view on December 16th, Friday, tomorrow for that, right? So today it was what we had anticipated about bearish divergence in descending wedge breakdown. So that has happened, probably a little early, but then a little harsh. But it happened. A pullback happened, which is evident. It had to come because it is a lot. 44,000 it had hit, and then 150 level it went in the Banknifty. Banknifty was rising without any stop, and today there is a pullback that happened. Same reflected in the Banknifty also. So both the high of the Bollinger Bands, which is indicative of consolidation or sideways movement, is what is indicated, right? But you have to keep in mind that it is a breakout that has happened from the trend line. It had moved up. Now there will be some retracement to the support zones. So give a watch of the probabilities where it can hit the resistance and support zones, and then play accordingly. But in very short term, the price action is as in moving averages. Formula trend has dipped. The case of Nifty especially. Banknifty is also shown a big downfall of 100 points today. If that continues tomorrow, it's a very likely that it can happen. US market is at a resistance level, so core is spiking back, and rupee there is it's shooting up in the bullish momentum. It's now cool off is happening there. So all of this bearishness from the global commodities, global markets, and then also the price action is indicative of some correction that has to happen. and 90,000 is not going to be that easy to break. Not, it may or may not happen by the end of this year, current year basically, is what it looks like. Unless there are some mega bullish things comes in, which is less likely. So it's going to be taking some more time. Some more correction may be coming in is what. So the view is mild bearish for the next. Because market is at resistance, as I said, you have to keep a close eye to that. Rupee is still at very high levels, and crude and gold has slipped, which is good, which is positive for the bulls. That's the only thing that is positive. And Banknifty still holds good momentum and trend. The bullish zones itself, although there is pullback that has happened. So if that bullish divergence, posterior reverse divergence is going to work out, then it could pull back all that is lost today, next day. It can happen. So, but based on what the charts are saying, the indicators, parameters that you're studying, what it says, there is some more bearishness that may come in, some more correction, consolidation may happen. So it may dip a little more, then climb back, dip a little more. So stay there for some period of time before it can take the 19k. Right? That's what is going to happen. But PIX is less, code is less, Torrent is corrected, Banknifty is still bullish. So all positives for the both sides. So my view is mild bearish for the next day. Levels towards 18,100 very crucial. 19,000 also is very crucial. Nifty 43 and 44,500 is crucial. 45,000 basically. So there are levels on the upside and downside for both the indices. So productive capital in the VIX is spiking up. It will be difficult to trade for the options. Yeah, so get a wider range when the main reversion is happening. When you know option strategies, when you down direction strategies, have hedge positions overnight so that you have capital that still remains there. So play safe, right? Position size cut short when the VIX is spiking up, and then manage your risk and positions with a wide range non-direction strategies, specifically on the options if you play. So that's my view, mild bearish view. So hope this helps. If it helps you in some way, don't forget to subscribe and share it with your friends. We have very few subscriptions. If you are subscribed, share it with your friends. So that's the only way that we can have some motivation from doing this analysis every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.